Good day, learners. In today's lesson, I just want to do a quick recap on salaries and wages. Now, this is a topic that you learned in grade 10 when you would have completed the salaries and wages journals and you would have posted to the ledger. However, thereafter, from the second half of grade 10 right through to grade 12, this often becomes an adjustment. And that's where people start getting confused as to which amounts must go where. So before I start, the first thing we need to remember is that there are two parts to working with wages and salaries. And the first part is the deductions. This is what the worker, the employee himself, has to pay. Now, under the regulations of the country, the worker doesn't get given all this money and then him go make his payments. These deductions are taken off his salary before he gets it. But it still means he's paying it. And then secondly, we have what we call the contributions. This is what the employer, the company, also pays. So let's start by focusing on the deductions part. So I've taken an example where you're given a gross salary of 16,000. Now that is his total salary. That's what the person is employed at, 16,000. Under the regulations of the country, he doesn't get given the whole 16,000. The company has to make certain deductions off that before he gets paid. There will be his tax, there will be the pension fund, the medical aid, and the UIF. Now there can be some others, for example, trade union levies or a staff fund, but these are the main ones. You will either be given the amounts or there'll be a percentage of the 16,000. But what I'm focusing on is the double entries more than the amounts now. Now this amount here, this whole amount here, which equals that 6160, has got to be paid out of that 16,000. So if we take that minus all of this, we are left then with an amount of 9,840. So this is what has to be paid, 16. This is who that amount is going to be paid to. So how do we show it in the financial statements that you're doing where you're recording your adjustments? In your income statement, you'll have the expense of the whole 16,000. That's the what. That's what you have to pay. It's the amount that's going to have to be paid out. But in your balance sheet under trade and other payables, liabilities, these amounts will be shown because they are still owed. Generally, your adjustments will say that somebody's been left out of a salary journal, for example. And so he hasn't been paid, so these amounts are still owing. The important thing is that these amounts there must equal the 16,000. You've got to be in balance. There's got to be a debit and a credit. So that is what I've got to pay. That's the whole expense, and that is who I'm paying the separate amounts to. So we are showing how this 16,000 is being paid out. Now let's move on to contributions. Now, under the regulations in the country, the companies are first of all compelled to pay to the UIF. So while the individual pays 1% of his salary, the employer also has to pay another 1%. It is generally customary in most companies also to pay towards the pension and the medical aid. So what they're saying is if you work for us and we're paying you 16,000, we will over and above this extra. We will pay an extra amount into your pension fund and your medical aid, and by law we also have to pay into the UIF. You will benefit from all of this when you go on pension because more would have been paid into your pension fund. You would have a better medical aid fund because the firm is also paying in. And if you're ever unemployed, obviously there's been more money paid in. So these are all benefits to you. It's all part of your salary package. So the expense now increases for the company. So the what do they have to pay? They have to pay the 16 plus these amounts. But again, who are they paying these amounts to? And because most adjustments they haven't been paid, we now owe the pension fund not only the 960 that the worker has to pay, but the extra 1280. Same with the medical aid, same with the UIF. The SARS doesn't change because firms are not allowed to pay your tax. And the creditors for salary is still the same as we had above. It's still based on your gross salary minus what you, the worker, have had to pay out of your salary, minus your deductions. So, from the top, we said that came to 16,000. These contributions came to 3,840. And that brings in another very important concept of what is the cost to the company to employ this person. It's not just the 16, it's plus all these extra expenses. So the cost to employ somebody is 19,840. How does that get put into your financial statements? Your income statement now will still have your salaries and wages. That's still an amount that has to be paid. But you're going to have an extra expense to show the contributions. Now sometimes you get a combined contributions like this. Or you might have 3 separate contributions accounts, a pension contribution, medical aid contribution, and a UIF contribution. Or the third option, they are sometimes even combined together and put all under salaries and wages. Because at the end of the day, they're all costs to do with employing that person. So there's your debit. There's your expenses. In your balance sheet under your liability, here's your credits. This is the amounts you're going to show that you owe, which included the deduction plus the contribution. So that at the end of the day, this whole amount there must equal that whole amount. These things must be equal. There must be balance. So you've got your total expenses, what are you paying? And your liabilities, who are you paying those to? Now, this adjustment is very common for all the grades, irrespective of doing a sole trader, a partnership, or a company. So, as you're working through the adjustments, try and focus on sorting out which figures go where. And if you're not sure, you can always come back to this video clip to look again until to see how to do the salaries and wages, and keep doing it until you have a good understanding of it. Good luck.